This is William Richardson, the original money doctor, the voice of reason with a financial checkup and question of the day. I have my daughter with me here today, Esther. Esther, how you doing?
Hi Dad, it's great to be with you.
It's great to have you here again today. So what is the question that we have today?
The question of the day comes from emails, messages, callers, and personal contact. Today's question is, what is the section 7702 of the IRS code?
That's a great question, Esther. Do you know what section 7702 is?
Well, yeah, Dad, you talk about it all the time. It's the most powerful section in the IRS code.
Absolutely. I'm glad you were listening. Okay. That's a section most people don't know and don't understand. It's something I teach in seminars and directly with people. So I will explain that in detail over the air in just a few minutes. But interesting question. Thank you, Esther. Our question here of the day is, what is section 7702 of the IRS code? It's a very interesting section. It's a code that most of you probably have never heard of. If you did, it's from some internet search that you did. But everyone needs more of it. More of what? What is it connected to? It's the Internal Revenue Code, also known as section 7702. It's the section that discusses the tax implications of life insurance contract. So 7702 is tied to a life insurance contract. Now, we like life insurance contracts for the simple fact that they are a contract and you know what you're getting up front, what you're getting into, because it's all clear. You may hear that, well, that's a bad thing because you're tied into it and you're locked into it. I want flexibility, so I want to be directly into the market, so I have more flexibility on my assets. It's a difference of opinion. That's a philosophy. That's a decision you have to make for yourself and your family and your business. I can't make that for you, nor can anyone else. What we can do is share education, and you can say, I didn't know that, and I didn't know what I didn't know, and now that I know. So what is the most unique feature of a permanent life insurance? And when we're talking permanent life insurance, most people have term insurance, which they try to find the cheapest amount of insurance they can for the largest amount of benefit because they don't want to pay more than what they need, and it's a commodity to them. When I work with a permanent life insurance contract in the financial planning that I do with it, it's totally different. We're looking for it as a lifetime benefits and family benefits. The most unique feature of a permanent life insurance under section 72E and section 7202 of the Internal Revenue Code is the accumulation of cash inside the insurance contract is tax advantaged. Not only can the cash value accumulate tax-free, but the cash can also be accessed tax-free. So let's repeat that again. So not only can the cash value accumulate tax-free, but the cash can also be accessed tax-free. Hence, the beauty and magic of life insurance. Yes, the beauty and magic of life insurance. It is a unique vehicle that allows tax-free account value accumulation, allows you to access your money tax-free, and when you die, blossoms in value and transfers income tax-free. So what does that do for me? So if I have an IRA or 401k or any other vehicle, when I die, I may have a step up in basis. I may have to pay taxes. I may have different situations depending upon what kind of asset class and vehicle I have. When I have my money in a permanent life insurance contract, whether it has cash value or not, when I die, that money passes on to my family tax-free and blossoms. So for example, let's say I put the money in there, and this is when we're talking about a side fund. We're really talking about a properly funded, tax advantage life insurance contract that allows our money to grow and give us all the benefits that we share in the World Economic Report and the 6 different rules, principles, founding values that we use. And feel free to go back and look at that as many times as you need to. But that money continues to grow. And let's say, for example, taking numbers out of the thin air here. Let's say we have $500,000 worth of accumulated cash value, and we have $1.5 million in a death benefit. So when I hit that cash value at $500,000 and I pass on, do I just pass on $500,000 tax-free? No, I pass on $1.5 million tax-free to my beneficiary, whether that be my wife, my kids, whether that be a nonprofit, my church, whoever I designate as beneficiaries receives that income and that money tax-free. It's a wonderful benefit to have, and it's something that I think is an extreme gift that is underutilized, because most people do not have enough life insurance. And when I show someone life insurance as part of their complete retirement benefit package, whether it's for an individual or for a business or for executives in a business, we're utilizing this to fund a lot of different vehicles and financial situations in the future. One of them that I really like is college funding. And what I like about it for college funding is when you're going for financial aid, all your assets are looked at. If you have money in cash accumulation accounts, generally that money is considered income for you and shows up on your 1040 as income. That goes against you on the FAFSA for your college funding. But if you have money in your accumulation account under a properly funded life insurance contract that you're using, that money does not show up as income. So it allows you to maximize your savings, maximize your funding, and maximize your gifts from the college and from financial aid. It's a wonderful thing to look at versus where you're putting your cash. So we can move our cash from one account to another account and increase the amount of money that the college or the financial aid is going to give to us, because it's not considered income. So it's something very good to look at just as that code. And if that's the only reason that you use it for, and you have 5 kids, you're going to see tremendous amount of savings that you're going to make if you live through the whole part. The benefit here is, as we're talking about, as it blossoms in value, if something happens to you, you know all that funding is going to take place. And that's a traditional reason why people get life insurance. So if they pass on, that's a risk value. But once again, what are they doing? They're looking for the largest amount of return, so the highest amount of money that they can qualify for the smallest amount of money. And it's basically a liability to them. It's not an asset. It's not something that they're using to see as it grows in value. Or they have some simple whole life or some simple UL that is underperforming in the past, and it's taken to an advisor, and they're looking at it and saying, well, that's not a very good investment. Let's cash that out and let's put that into another investment. So what you're looking at is whatever vehicle that you're using, if it's an IRA, if it's directly into the market, if it's an insurance contract, is that built to the proper and the best way that it can for the particular situation that you're looking for? Because not every insurance company, not every contract can be maxed out in a certain way. It needs to be done in a proper way. It needs to follow a lot of different laws that are out there, and it needs to be done right, or in the future actually could pay more tax than you currently are doing now. You could pay more fees. You could be in not a good situation if it's not built correctly. So the code itself allows you to have that money grow tax-free and allow you to benefit from that. Now, how is it built? Who's building it for you? So let's look at manufacturers for vehicles. There's a lot of different places to go get your vehicle made. Why do you choose one manufacturer over another? Because they have good commercials? Because you like the color of the car? Or it's because you really deep down feel that this manufacturer builds a better car, and if I get in an accident, my family is going to be protected? Is that the reason you purchased the car? Or is it because it gets the best gas mileage? Or is it because it looks to you the best, or you feel comfortable, you feel good when you're driving it. Whatever the reason is, you picked one manufacturer over the other for research and knowledge and understanding. And that's what you need to do with any of your financial vehicles. So the question was, Section 7702 of the IRS code, what is that? The opportunity to have money grow and accumulate in a proper structure situation and allow that money not to be taxed. And if you happen to die before you have the benefit of using all that money in retirement on the permanent life insurance structure, to allow that money to blossom and grow, take a payment out on a monthly basis, a yearly basis, whatever you need to do throughout your lifetime to supplement your income, to offset Social Security or any other investments that you have, to live the quality of life that you want to. And what do we always do? We go back to when? We go back to the last day. So if you're leaving tomorrow, which means you're leaving this earth, what did you want to leave behind? We work back today through looking back where we need to be, following the 10-10-80% rule, following the rule of the farmer, and seeing what is the best structure for us to have. And remember this, whatever you're doing, is it increasing the quality of your life? Are you feeling better as a family? Is it doing something good for you? And with that said, keep your money safe. Stay tuned. I'm William Richardson, financial strategist. You're listening to The Original Money Doctor, the voice of reason. We'll be right back after this break.
This is Esther Richardson, and you're listening to The Original Money Doctor with the financial checkup of the day. Ask about our educational, private, and public online seminars, video series, and live broadcasting events. Visit the event calendar at moneydoctoradvisor.com.
You've been listening to The Original Money Doctor, inspiring you to rise above it all and plan ahead with guaranteed success. William F. Richardson is The Original Money Doctor. Tune in next week, same time, same channel, 105.5.